So, Jerry, toys were actually a big bright spot in the Walmart report. Are you surprised they're taking share?
No, I'm not surprised at all. They had the leading share going into the holidays. They've always had the leading share. But this was a remarkable report. Their sales were up. Their comp sales were up 4.2%. The traffic was up in the stores. The average ticket was up. The e-commerce was up. And their operating margin was up. So despite the gross margin pressure that all retailers continue to see as sales shift to the internet, they more than made up for it with expense savings, so their operating margin was even up. So it was a fantastic quarter all around.
Bud, do you agree?
I do. It was a lovely quarter to see. We had, as you said, traffic was up 0.9%. It did slow a little bit from the last quarter, but you see that waffle back and forth a bit. It was a really good quarter, really impressive from Walmart U.S. Impressive international, well, impressive in Sam's Club. So overall, a very impressive quarter.
Though it looks like, Jerry, on the U.S. comp numbers, pricing did offset foot traffic. Is that a problem?
Foot traffic was still up. And that's remarkable if you think about what's going on in the world right now. So traffic was up and pricing was more important. That's right. But traffic was still up. And consider that we live in this internet age. And so they still were able to draw people to the stores. They've kept up. They've invested. A lot of their growth, they said, came from grocery, which has been a slower growth business. So they've been investing in in-store pickup, you know, where you order online and go to the store to pick it up. That was growing. They have pickup spots. They're forward-facing, and they're doing the right things for the future.
Yeah, pickup now in 2,100 stores, delivery in 800.
They aren't going to stop. They're putting, and they've invested price in groceries. So the gross margin isn't only due to the internet effect, the e-commerce shift. It's also because they keep investing in price. And let me tell you, they're making a big impact on the other grocers in the market. When they saw Lidl coming over to compete with Aldi and start taking that business, Walmart didn't just sit there. They responded. They've been taking their grocery prices down, and that's had a big effect on the entire grocery market, and you see that in their grocery comps today.
Yeah. But clear up, for viewers might see a headline or two arguing that comp traffic was down 70 basis points. Is that being sliced a certain way?
Well, I think that's being maybe slicing it a little too fine. You do have that. It's waffled back and forth from as you looked at quarter by quarter for the entire year. You're right, it did slow from the third quarter by about that, but I still think that you're still seeing an overall good performance in the stores. Also, I thought was very notable. Net Promoter Score went up 10 percentage points or 10 points, which has already been a very high performance for them for grocery pickup and grocery delivery.
Do you think, Bud, on ticket going up 230 basis points, are they raising? They've talked about raising prices if tariffs go a certain way, or is this more about stealing share and just people buying more when they're in the store?
Well, they're going to continue to invest in price. They said that on their call that just ended a few minutes ago. So they're going to continue. They still believe that that is what they're all about. Save money so people can live better. That's what the customer expects. That's what the competition should expect. So I would expect that as well. They did say inflation was relatively mild and benign, and they said, but whatever it is, our buyers understand how to deal with it.
You know, on this comp traffic point, I want to be clear. Their traffic was up 90 basis points on a Q4 basis. But it was just, when they say change, they're talking about Q4 of last year. It was up 160 basis points. So the fact that traffic still grew by 90 basis points shows that they are fighting against this internet onslaught, and they're growing both in the stores and on the internet, which is a tremendous job in this environment.
Now, 180 basis points of the 4.2% comp store sales was digital, which is up. In other words, it's accelerating, but can that continue to accelerate, Jerry?
Well,
or does that, I would think.
They've said they're going to grow 35% instead of 40%, you know, this year on the internet. It's still growing very rapidly. The law of large numbers says that they can't keep growing at the same pace, and neither can Amazon, and neither is Amazon. But I think there's been a lot of nonsense out there about what happened in December of last year. And the reality is it was very strong across the board. I think there was something a little askew of that one report that said something different. And I bet you it comes down to the internet and tracking those internet sales correctly and all the marketplace sales and everything that's going. That report said the internet sales were down in December. Now, who could believe that but someone following a government report? That's ridiculous. And again, keep in mind, sales were up, even by their report, by almost 10%. It's just that they put in a seasonality factor to take it in negative territory.
You're referring to the retail sales, non-store.
That report cannot stand. It is not indicative of what really happened. The Storch Advisors Index, where I take all the sales that come in and I weight them by volume of retailers, now stands at almost a 6% increase for the holiday season. Now, granted, some people went bankrupt, Toys R Us, Sears, take them out. It's still not going to make any difference. The big guys, Costco grew by 7%. Target grew by almost 6%. Now Walmart at 4%. That's most of the market already.
Right.
Of course the market grew.
Well, yeah, we'll revisit that and see if they changed the methodology or something on that. Hey, Bud, did they say anything on the call, and I know you got on to get on with us as well, about Flipkart and any headwinds from that change in the law in India as a result for their business there?
They used the word disappointing, and they're going to work with the regulators to see if they can ameliorate that. And it does make a change, I think, in the Flipkart outlook, but it didn't make a change enough for them to change guidance. But they were disappointed in the change in the regulatory environment in India. And so, yes, they did note that on the call. And that's about all they would say, because they understand that they're dealing with regulators and governmental agencies.
I mean, speaking of guidance, they did reiterate growth in U.S. comp store sales between 2.5% to 3%. That is a slight slowdown from what they saw the previous fiscal year. Are retailers in general, Bud, just expecting weaker consumer spending this year?
Well, I'm not going to go there, because they simply reiterated guidance. And I think that if you were a naysayer, you could pick at that a bit. But I think you want to keep guidance a bit in check. I don't think you want to get over your skis in guidance, and I think you want to try to overperform, which is what they did in the fourth quarter here. So I think it's very hard to read into that. Your crystal balls are always a little cloudy when you're looking that far in the future and you're looking a full year out there. 2.5% to 3% for a company the size of Walmart is really quite impressive, quite frankly.